How many so-called decentralized projects are actually a VC dump waiting to happen? You know the ones. Massive insider stashes, silent token unlock bombs controlled by the founders before you even get a whiff. It's a rigged game. But today, we're talking about a proof-of-work powerhouse that flat-out refuses to play that game. Kaspa. This chain launched clean, no pre-sale, no fancy-pants venture capital stack, zero silent unlock bombs. It's scaling on pure, unadulterated genius-level tech, not market manipulation. While other chains just brag about the speed they might achieve someday, Kaspa already rebuilt how a blockchain works. We're on the cusp of an explosion, and this fair launch titan is the wick. Welcome back to the channel, Crypto Savants. If you're tired of getting rugged by centralized deception and are hungry for the real alpha, you need to stick around. I'm diving deep into Kaspa today, the clean, fast, and fiercely independent proof-of-work contender. Hey, do me a quick solid, hit that like button and subscribe right now. This is the financial analysis you're not getting anywhere else, so let's unbox the only truly fair launch crypto that matters. The story starts with its origin, and this is where the tension is built. Kaspa launched in November 2021 via a pure fair launch. Think Bitcoin, but 2021 style. Zero premine, no tokens for the team, no insider allocations. This wasn't built by a marketing department, it was built by a community led by Dr. Yonatan Solinski from Harvard, whose Ghost Protocol paper is literally cited in the Ethereum Whitepaper. Let that sink in. The intellectual roots of Kaspa are fundamental to the entire crypto space. It's like finding a real, honest politician. It almost feels too good to be true. This history is Kaspa's superpower. It's immune to the dreaded VC dump. So what's the core tech that makes this chain a threat to the established giants? It all comes down to the BlockDAG architecture, specifically the GHOSTDAG protocol. Stop thinking in terms of a linear chain. That's Stone Age. Kaspa operates as a directed acyclic graph. In simple terms, it processes multiple blocks simultaneously, not one block at a time. It's internet speed on a secure proof-of-work foundation. The network currently screams at 10 blocks per second, and the roadmap is targeting a mind-bending 100 blocks per second. When someone tells me they're stuck waiting 10 minutes for a transaction, I just shake my head. Kaspa is giving you transaction finality limited only by internet latency. That's not a feature, that's a paradigm shift. This is the data point that separates Kaspa from 99% of the market, and you must understand it. Most altcoins have an inflation bomb waiting to explode. Kaspa is the opposite. Max supply is around 28.7 billion KS. Here's the kicker. The circulating supply is already about 93% of the total. This is huge. It means the selling pressure from new issuance is nearly exhausted. My expert commentary on this: the tokenomics are honestly a masterclass in long-term scarcity and fairness. Because of the fair launch, there are zero token allocations for founders, advisors, or VCs to dump. So, you're only worrying about market flow, not, a scheduled financial terrorist attack. Kaspa manages supply through a smooth, chromatic halving schedule. Rewards decrease gently every single month, cutting the annual emission by exactly 50%. This kind of predictable, transparent scarcity is what gives miners and holders real conviction. This isn't just good tokenomics, this is digital cash architecture built for the long haul. We're not just seeing retail hype anymore. Marathon Digital, one of the biggest Bitcoin miners in the world, announced they're actively mining Kaspa as a revenue diversification strategy. They mined over 93 million Kaspa tokens. Why does this matter? It's institutional validation. When a trillion-dollar industry player starts allocating serious capital to your proof-of-work asset, it's a clear signal. They see the energy efficiency and the long-term utility. It confirms my belief that Kaspa is a serious, secure Layer 1 asset, not just a pump-and-dump novelty. Marathon isn't mining garbage. They are diversifying their digital asset portfolio with a future gold standard. The biggest historical knock against Kaspa was its lack of smart contract compatibility. That weakness is dissolving faster than a sugar cube in hot coffee. The launch of the Kasplex Layer 2 ZK-EVM rollup is, well, kind of like flipping the ignition switch. This brings Ethereum virtual machine compatibility to the lightning-fast BlockDAG. Developers can now deploy Solidity smart contracts. Hello, DeFi, NFTs, and complex dApps. With the introduction of KRC20 tokens, the foundational infrastructure is, finally complete. This shift transforms Kaspa from just a fast payment rail into a global general-purpose platform, and the fact that developer contributions grew by 50% year over year really confirms the ecosystem is exploding, not stalling. The smart money is moving in. We are seeing the beginning of the altcoin rotation. Look, I love the fair launch story, but let's be adults. We cannot overlook the risks. The pure community-managed open-source governance is a double-edged sword, highly decentralized, but it can be slower to pivot than a VC-funded startup. The major risks are entirely technical and competitive. The Kasplex EVM ecosystem must gain traction against established, dominant players like Solana and Avalanche. If it fails to capture developers, it risks staying a niche proof-of-work asset. Also, as a pure proof-of-work network, it relies heavily on miners for security. We need to see that public node count consistently expand. The risk isn't internal corruption, it's external competition and the successful execution of their complex DAG protocol roadmap. It's a race against giants. Alright, the fun part. Let's do some quick, snappy millionaire math. Disclaimer. This is for fun, not financial advice. So, Kaspa is currently down about 75% from its previous high, sitting right around the 5-cent mark, the ultimate accumulation zone if you ask me. The bear case. If KAS just reclaims its previous high, that's a 4 times move from here. To hit $1 million you need about 4 million tokens, costing you around $200,000 today. Solid. The base case. A 10 times move from here, and honestly, this is achievable if the EVM launch succeeds and we enter a proper bull market. You need 2 million tokens, costing $100,000 today. Now we're talking life-changing money. The bull case, hitting $1 per token, is honestly a mouth-watering 20 times from where we are right now. You only need 1 million tokens, and that would cost you a mere $50,000 today. If that happens, it would take Kaspa's market cap to a staggering $25 billion. That $25 billion valuation? Well, that would put Kaspa firmly in the top 10 by current metrics. What really makes it possible is just one thing: institutional access. So, Marathon's entry is really the blueprint here. If Kaspa actually achieves top 10 status, a KAS ETF is, well, not an impossible dream. Proven speed, elite decentralization, and ETF demand, these are the necessary fuel for that $25 billion fire. So, here's the summary. Kaspa has the elite decentralization, the honest tokenomics, and the genuine technological innovation to be one of the cleanest proof-of-work assets on the market. The fair launch creates long-term conviction, and the BlockDAG is a verifiable breakthrough. It is early, the competition is fierce, but the upside is asymmetric. You now have the full picture. You know the tech, the numbers, the risks, and the upside. If you got real actionable value from this breakdown, smash that like button, subscribe to the channel, and share this with someone who keeps buying garbage projects with silent unlock bombs. You just might save them from a financial disaster. I'll see you in the next deep dive. I am an analyst, not your financial advisor. This is a breakdown for informational and entertainment purposes only. The cryptocurrency market is highly speculative and volatile. Never invest capital you are not prepared to lose, and always conduct your own comprehensive research.